Welcome to episode 15 of the Blockchain Immersive Podcast. Hello, friends. It's been a while. I've been really busy, and a lot of that has been trading these wonderful markets. I know that sounds really crazy because the markets have been down, but if you've taken any of my courses, you realize that you can participate in these markets going up and while they're going down. But anyway, I'm not going to bore you with all of that. Really, what I want to discuss is the general decline in this market. I waited until now because I know from just many years of experience that when these markets start collapsing, there's a lot of fear and there's this initial panic in the decline. And, you sort of need things to sort of slow down before you address it, because in the middle, when a knife is falling, there's no way to catch it. So you have to just let it fall and then take it from there. And that's why I waited this long, because I wanted the panic sort of to subside. It doesn't mean that the markets won't continue to go down, but the precipitous drops seem to have slowed down, at least for the moment. So if you recall last summer, I mentioned that these markets go through cycles. I also discussed that in my courses, and the worst thing a person can do is to panic sell due to fear or panic buy due to fear of missing out. And really the rule of thumb is if a person is forced to panic sell, that means they simply have put too much money in the market. Because if you are so afraid of losing it, that means it was almost too much for you to put in. And that's really plain and simple, and I address that in my courses as well. Now, the thing is, of course, when markets go down, everything becomes cheaper. But we'll get into that in a moment. I sort of want to address the big question. It's like, why are cryptocurrencies going down? For once, the answer is fairly simple. Macroeconomics. Unlike the previous declines in crypto, this time we've entered a very precarious economic situation, and this has caused all major markets to decline, not just crypto. So for example, you can look here at Bitcoin, and we have this from the high, and we're in a downward market. We have other markets too. Let's look at the Dow Jones, the stock market, right? And that too has come off from its high, and it's headed lower, or is it might still go lower, but right now it's definitely lower. And of course, we have a lot of other factors, right? We see that here, the United States interest rates. As you can see, we have a nice move up here, very precipitous move up. And other countries are also having this problem as well. We have housing starts, U.S. housing starts coming down. They're coming down. That means the housing market is cooling down because interest rates are moving up, so demand for mortgages is moving down. The inflation rate is clearly up, as we've seen. And the gasoline prices have been up too, and they're just off their highs. Now, even though you see here the high here was $4.41, this is the cash price. That's not what they're charging at the pump. This is what the gas stations are actually paying, and then they charge you a premium. So if they're buying it at $4.41 per gallon, they're charging, $5 per gallon, $6 per gallon. And usually that price involves shipping of the gasoline, the markup, the retail markup, and other expenses involved in gasoline production, gasoline distribution, because when they pump the gasoline into the gas stations, that costs money, the trucks, everything. So there's a premium to be added to that price. So and so that's why you might have been paying $6 a gallon, whereas the cash price was $4 a gallon. And of course, we have a smoldering war raging in the Ukraine. We have supply chain bottlenecks. We have workforce shortages. These are all forces that are exerting tremendous influence on the cryptocurrencies markets because, after all, where does the money to invest come from? It comes from everyday people like you and me who are influenced by economic shifts in the world. No one is immune to the slings and arrows of inflation. I mean, you even see the rich people bitching about it, right? And it's just impacting everyone on the levels that they're on. You know, now it's easy to blame a single government, right? I mean, I see these bullshit posts about, oh, it's Biden's fault, oh, it's Trump's fault, blah blah blah. If that were the case, inflation would be a domestic issue. It would be just something that's happening here in the United States. But it isn't. Inflation is impacting the entire world right now, and our markets are not the only ones going down. All over the world, markets are going down. So we can't relegate this to one government. We can't make this a particular, make it into politics, and we can't really blame COVID relief efforts, although they surely have put pressure on the economy, because that also takes time for it to trickle down. But rather, these are global issues, and they're far more nuanced. And while, of course, COVID sparked the fire, the fuel was already there and would have been lit by something else, because there is no shortage of combustible material in the world economy. So we need to look at this from a global perspective and realize these macro forces are impacting people's ability to invest in any asset, not just crypto. So these macro pressures are one reason there is pressure on the cryptocurrencies markets. Now, there are other reasons, right? There's problems in the industry. Like, for example, we had here the fall of Terra. Terra was a major blockchain. It's still around, but in a weakened state. And, this was the darling of the cryptocurrency world, even though a lot of people dissented. And I'm not going to get into the nitty-gritty as to what happened here. But the collapse of Terra really rattled the market. I mean, truly, truly rattled the market, and it just caused a collapse. The entire market reacted to it. So, what was considered stable turned out to be a house of cards. It also doesn't help that cryptocurrency exchanges are laying off people. As you can see, they're laying off people, and that's causing also a lot of pressure in the market. People are scared. Now, let me just tell you this. This is part of the economic cycle, and it sucks. And all these firms are to blame in some way because during the good times, they overhire, right? And the same thing for stock market firms and investment banks. They're hiring as the market goes up. And then when the markets come crashing down, they lay off a bunch of people. And Alan Greenspan called this initial elation irrational exuberance. And he was completely right. So the question is how long will this doom and gloom last? Well, I mean, that's anyone's guess, but if you've taken my courses, you know damn well that I'm not worried. And you know why? Because everything right now is for sale. Everything is for sale. I mean, just look at this. These prices here, everything is for sale. But even more importantly, the crypto and NFT and blockchain space is actually growing, but no one is paying attention. Remember, I mentioned that last year too. People, when the markets are in the crapper, so to speak, people aren't paying attention. And that is why people always lose, and that's why people don't always benefit from these markets, because they get in too late. So despite the market's collapse, there's mostly good news for the cryptocurrency space. And like I said 1,000 times, the public is asleep, but all the smart money is getting in now. And here's an example. Look at eBay. eBay purchases NFT art marketplace known Origin. eBay, one of the largest companies, is getting into this space now. Why now? Because everything is cheap. Everything is cheap right now. And if you remember in my course on NFTs, I showed you many videos of Magic Eden, which is a Solana-based NFT platform. They raised $130 million and hit unicorn status of 1.6 billion valuation. Just a few days ago, this came out. Why is this happening? Because everything is cheap. Look, the smart money is getting in right now. And what about JP Morgan? JP Morgan wants to bring trillions of dollars of tokenized assets to decentralized finance. They're jumping in to this space where everyone is running away right now. They are jumping in trillions of dollars. They're looking to tokenize. Again, just recently. See that? I bet you most people didn't even read this, don't even know that these things are even happening. And again, Goldman Sachs is the leading investor group to buy Celsius. Now, Celsius was an exchange that experienced quite a bit of hardship during this collapse, this recent collapse. But look, Goldman Sachs, the one firm that has made the best investments ever in the industry, meaning the financial industry in general. They have an impeccable reputation for making good investments. They're getting in on this. They see, wow, this is a fire sale. We got to get in on this. And then we have all the tech giants. They create a metaverse standard forum, software and terminology standards. This is Meta, Microsoft, NVIDIA, Unity, Sony, and 30 other companies are coming together to build the infrastructure for an interoperable metaverse. And that's all going to be blockchain based. So all of these companies are getting in on it now while the market is down, where the public is completely asleep right now. And let's take a look at New York City. New York is by far the strictest, one of the strictest states for cryptocurrency. That's why you have to go around it. If you live in New York like I do, in order to trade certain things, you have to sort of go around New York to do it. But look at this. The New York City mayor, proposes the removal of the state bit license scheme. I mean, this is huge. This is huge. He actually said in April, New York State is the only state to require a license for cryptocurrencies. That's a high barrier, and it just makes us less competitive. We have to continue to be competitive. Now, I don't know what you think about New York politics. That's your thing. But what he is saying is that he wants to remove the barriers. But look at when they're doing this. They're saying all this in the midst of the decline in the market. They're not saying this when the market is sky high. They're not. What they're doing is they're starting to get in on this now. Now, this is just a small fraction of the good news hitting this market. But is anyone paying attention? I don't think so. I don't think so. Not the retail investor, not the everyday investor. No one is paying attention. Now, if you remember this chart, it's also on the Blockchain Immersive page. Remember, I showed you this last year too. This is the common cycle of these markets. We are probably around the return to mean in this area, but when that's essentially here as well. And look at this. Smart money institutionals are all up in here right now. Okay. And this is where the public starts getting in. And the thing is that you don't want to be part of this. You want to be part of this. And so, look, I'm not a financial advisor. I'm not telling you to invest in cryptocurrencies, but I'm saying is it's a great time to learn once again. So although the markets have completely collapsed and you might be experiencing a loss right now, I mean, my long-term positions are at a loss, some of them, but my short-term ones are not because I'm trading the market up and down. So if you don't want to do like something like short selling or something like that, and you're currently at a loss, I mean, you have two choices, right? I mean, you can sell, book the loss and then write off the loss on your taxes, or you can just hold, or, even buy more at these prices, at these bottom prices. So, and again, I'm not telling you to do this. I'm not a financial advisor, but I'm just saying this is a fire sale right now, and it may continue to be one, but you know what? It's better than it was 6 months ago. I mean, people who lamented saying, oh my goodness, I can't get into Bitcoin at 70,000. Well, it's at 20,000 now. You know what I mean? And you can buy fractions. You could buy $200 worth of it. You don't have to buy, or even $100. But what I'm saying is that in general, in the end, these markets that go down and crash offer steep bargains. I'm not saying you should or should not invest in them, like I said, but what I am saying is that it's worth learning about. So then next time they start coming back and they start roaring back, which they will, you'll be well situated to take advantage of that. That is it for this podcast. I think this was the perfect timing to bring this out only because, like I said, sort of things have sort of stabilized a bit and the panic is out of the market, at least for the moment. So it's a good time to sort of see these things in a more rational way. So that's it for this podcast. I hope you are well. I hope you enjoyed it. And if you have any questions, just please feel free to email me at baal@blockchainimmersive.com. Be well.